That late day buying is where institutions are coming in and picking up positions on their portfolios, those type of things. So that's actually a good thing for the markets, at least in the near term. Here's what you need to know before the bell this morning. Markets did open lower yesterday and then rallied back to close basically unchanged yesterday afternoon. So again, the one thing that we've been talking about here lately is this really what we've seen kind of on a consistent basis for the last week or so in particular is this kind of late end of the day buying. Markets can kind of be weak intraday, but at the end of the day, markets tend to rally into the close. So again, yesterday was a good example of this. Market opened down yesterday, rallied back, had some buying come into the markets, actually got positive yesterday afternoon. It sold off and then rallied back into the close. And so that late day buying is where institutions are coming in and picking up positions on their portfolios, those type of things. So that's actually a good thing for the markets, at least in the near term. And as we start to move into November is a month where you have some of your largest inflows into ETFs and mutual funds for any month of the year. January is a big month, November is a big month. So you have a lot of inflows coming in next month. Of course, also, as we've talked about, buybacks will start back up then. Earnings season right now kind of driving the markets a little bit here as we start to get announcements from different companies. Paying attention to some of these quarterly profits, is important, and to see what they're saying about the impact of higher interest rates, higher inflation. So far, and again, we haven't had that many companies report yet, so again, not a lot to take away from the announcements just yet, but so far not a lot of real concern on these corporate calls. So again, that's a good sign as well. Corporations, at least at this point so far, we haven't seen a lot of big concerning data points about the markets and the economy going forward. So, markets continue to trade above the 20-day moving average. That's support. Below the 50 and the 100-day moving average, that's resistance. So really just kind of trapped in here right now. We're back into forming one of these kind of wedges in the markets. We do this kind of on a regular basis. We kind of compress prices a bit, and then prices are going to make a move in one direction or the other on a breakout. So a breakout below this wedge will retest the 200-day moving average. A breakout above this wedge, we're going to retest these highs from June and July. So there's not a tremendous amount of upside at this point, not a tremendous amount of downside at this point. Market's really kind of stuck in this range. So again, it's just kind of a function of managing risk in the portfolio for the time being. But that's what you need to know before the bell this morning.